Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to talk about Venezuela. We're going to talk about, well, not so much about Venezuela. We're going to talk Iran protests. We're going to talk Jay Powell made an unprecedented statement from a Federal Reserve chairman. He has been indicted. They've sent down federal indictments down to the Reserve. A lot of it has to do with those cost overruns on the remodel on the Fed headquarters there, the Fed HQ in Washington, D.C. And I tell you what, this is something. This engagement was something. I'm going to go ahead and we're going to cover it. I'm going to hit the high points. We're going to take a look at some of the indictments that have been handed down. And is Jay Powell guilty? Are they actually going to physically remove somebody from being the Fed chair? This was really unprecedented stuff. We've never seen the government in any capacity go after the Federal Reserve. It's brand new. We're going to cover that. I'm going to bring in a couple of questions up that are probably going to be controversial, but we have to ask them. And if you followed any of these live streams for the past year, I have been one of the biggest critics of that September of 2024's rate cut. I felt it was politically motivated the entire way. We're going to cover that. I'm going to show you what I mean and why I think we have evidence that's exactly what happened. So we're going to look at that. Iran protests. There's a potential regime change brewing in Iran, potential U.S. intervention. This is going to be really something to watch as this week unfolds. There's a lot going on. Venezuela market is still fluid. We don't know what's going to happen down there. And then also we've got some big-time news events coming our way this week with U.S. CPI, retail sales, a lot going on. So if you haven't traded yet this year, this week's probably a great week to be doing just that. You can see that we had sort of a big negative open on Wall Street, but no worries. We're dialed in and ready to rock and roll. You got a nice rebound. The key here is volatility. We've got a great comment right there from Eyes Hazy over in YouTube land. Hello, another big candle day. Yeah, it is. The markets are all over the place. We've got to do a trade update on our US 30. We've got a trade idea that's coming into play. 50,000 is coming into play for the US 30. We're also going to look at US oil. We've had a couple of real almost but not quite on getting our entry point. That 60 area is really getting a lot of compression between 59 and 60. A lot going on. As always, we're going to do a little Forex blitz towards the end of the session. I'll take any and all markets that you want to look at, and I also have a few cross pairs that I want to hit that we typically don't analyze, but we're going to go ahead and do that today. So I want to welcome everybody back. Yes, sir, good to see you. Let's see, Eyes Hazy, good to see you. Tina Jean, good afternoon, good evening, good morning, wherever you may be. I'm feeling pretty good for a Monday. Not too bad. Nice weekend break. I am ready to go this year. I'm absolutely ready to go. Charged, rocking. Let's do it. Let's see. T. Marina, happy Monday. Happy Monday, T. Yes, sir. He ain't giving up the chair, so they got to play dirty. I don't know. He might have played dirty first. We're going to talk a little bit about all of it, though. If you have any questions, be sure to ask him. Now is the time to do just that. Let's see, Tuku. Welcome over the How to Trade community. A lot of familiar faces here, longtime traders. Tuku, Lita, always a pleasure. Lita, Ralph H., Andrea Garwell, good to see everybody. Bobby Bob, hi, Coach. Welcome back. New week, new execution. Couldn't have said it better myself, Bobby. Absolutely. Let me see Jason. Good to see you, Jason. Welcome. Good afternoon. All right. Okay, guys, let's go ahead and get right out to price action here. We've got an interesting chart developing here. Big round number of 50,000 in the US 30. In my view, that's one of the biggest, roundest numbers that's on the board. And if you remember, we had a trade last week. We talked about it, this level being very, very important. Remember, if you get our trade ideas, you can check them out in the How to Trade trading room. You can find them on the How to Trade page on LinkedIn if you're on LinkedIn. You can also check me out at ShaneV_trader over on X. I posted all there. And then also, if you go ahead and follow me in the How to Trade trading room, it goes right out to your email. So right here, U.S. seizes oil tankers, key level for the U.S. 30 coming up. So right now we're looking at that 50,000 level as being a potential area of two-way action. And a lot of times everybody wants to say, okay, are we bullish or are we bearish? Are you long or are you short? Are you selling or are you buying? And I said, sometimes all we have to do is identify where the action's going to be, and then we're going to have an opportunity to capitalize on that action. I call it friction. We're going to see friction at 50,000, buyers and sellers. And that essentially, that's what price is going to look like. It's going to go up. It's going to go down. It's going to go up. It's going to go down. That's going to be an area of choppy or sideways trade. I would be shocked and appalled if we do just break right up over 50,000 and trend higher. If that is to happen, there's a major fundamental event that brought that about. I don't think that's going to happen, not at all. I really do believe that our sell right in front of 50,000 is just an absolute banger of a trade. We're almost there. We're looking right now as the crow flies, or that's what they say out west, as the crow flies, the distance between 2 points, the shortest is a straight line. Well, I mean, as the crow flies from here, you're going from 49.5 right up to 50,000. All right, that's 500 points. Typically, we're not going to see that big of a move directionally, at least probably not in the late session. So I'm watching tomorrow's CPI figure. If it comes in a little lower than expected, you're probably going to get a shot at that 50,000. So definitely want to take a look at that level. That trade idea is definitely on the board. Another one that we have on the board right here is U.S. oil. Now, I talked a lot about 60, and we're talking key levels because they're very, very important, especially early in the year. Right now, the markets are establishing the tone for what's going to happen the remainder of the trading year. Key level at 60. I'm very bearish U.S. oil. There's no question about it. Be that as it may, we've seen bids the last 3 days. No question about it. We were about the 7th of January. We were down there about 55.76. I pretty much figured we were going to take out the last year's low, which was down there right around 54.98. In U.S. oil, I was looking for that to crash. And now you sort of got a 3-day march that has coincided with potential regime change in Iran. So we're going to go ahead and look at that as being the market driver there. But what we have now is sort of a little bit of compression right ahead of 60. So I'm a long-term oil bear. Right now, the reason why is you're starting to see U.S. production come online. You've got a potential to really ramp up production out of Venezuela now. And also, if the regime does fall and there is a regime change and the folks that come in are friendly to Western powers, essentially what you're talking about is that much more oil hitting the market. Now, Iran is a big deal for a lot of reasons. We're going to cover those in just a second because it sort of is complex. But as far as crude oil goes, we were looking to sell right around 60s. It's been a close shave. 59.89, I believe, was our sell. Even 59.94 would be acceptable. Last 2 days high, right there, 59.77, and then 59.80. So that's what we call a failed auction. What happened today? The bidders came in. They tried to bid above Friday's high, up there at about 59.78. You got a little bit of a rally of about 2 ticks, and then a big reversal. That's what we call a failed auction. That's when the market tests the waters, say above a key level, like a previous day's high, like a previous week's high, month's high, yearly high, and then completely reverses within a few ticks. That's a failed auction. That really goes to reinforce exactly what I'm thinking towards the bearish part of this market. A lot of sellers in there, but we can't ignore the current geopolitics and how we are seeing civil unrest start to drive energy prices a little bit higher. Fascinating stuff. You've also got the dollar index off a little bit. This week on our Switch Markets newsletter, you're going to go ahead and you're going to get analysis on U.S. oil, UK oil, natural gas. Energies are big. The Iranian situation is playing huge in the energies markets. And then we're also going to talk probably about a little, we're going to pick a pair. I don't believe it'll be a commodity dollar, but we'll probably pick a couple of our Forex pairs to analyze as well. That's going to be out on YouTube tomorrow for the U.S. session, so check that out. Or excuse me, for the UK session, go ahead and check that out over at Switch Markets on YouTube. Get you up and running with our picks of the week, our hot picks. So let's see. We got a question here, or we got a comment. ABD, good to see you. ABD, welcome. Eyes, I thought it would hit 50,000 today with all the volatility I saw in gold. Gold's all over the place right now. Silver has exploded. I mean, silver's absolutely exploded. I think that, you know what, probably instead of a Forex pair this week, we're going to cover gold and silver in that video because it's just too much. It's too big to really ignore. Metals are going to the moon. Metals are going to the moon. We're going to talk about why here in just a second. All right, remember, if you want to trade anything that we talk about today, maybe get in on some of the market analysis or ask some questions on positions you have open. If you have them open at Switch Markets, that's a good thing. Zero commission account, 1,000 to 1 leverage. You're looking at $0 deposit withdrawal fees and a $50 minimum deposit. So whether you're a large trader, an institutional trader, or just a small retail trader, Switch really has everything that you need to get started. So we've got sort of a lot going on today. This was the big story. This was probably, I put Iran number 1. This was definitely a number 2, and this was a complete surprise to the markets. Federal prosecutors open investigation into Fed Chair Jay Powell. We haven't never seen anything like it. Never seen anything like it. There is an investigation into the Fed chair, and here's how this breaks down. We talked a lot about this last summer when Trump went to the job site and walked through it, and we talked about the cost overruns and what exactly the federal government was likely to do in response. Fed Chair Powell says he's under criminal investigation and won't bow to Trump intimidation. Chair Powell is under criminal investigation related to a $2.5 billion renovation of the central bank's headquarters. Now, here's where it gets interesting. The way that Powell has responded to being under investigation is unprecedented. Now, people, if you're a powerful person, you're a public person, if you're a big, business person of any real magnitude, you've probably been under investigation by somebody at some point. That seems to be the way of it here in the United States. I mean, they investigate everybody for everything. This is interesting, though. This came down from the DOJ, and you did get the indictment. You're under investigation, and the indictments are pending. So what all that means is there's going to be an inquiry. It doesn't mean that Jay Powell's going to jail. It doesn't mean that anybody's going to jail, but there's going to be an official inquiry. The reason why is they got $2.5 billion renovation on a single building that, quite frankly, just isn't that big. It's not that impressive. I mean, for reference, if you're an NFL fan, the Kansas City Chiefs just moved their stadium from Arrowhead Stadium in Kansas City into Kansas. All right, further in Kansas City's in Missouri, but they moved this thing into Kansas in a new location. The proposed stadium, a giant stadium, the ticket's only $3 billion. We're talking about one office building that they've renovated for $2.5 billion, and they're running about 5 or 10 years late on it. They know damn good and well there's fraud there. The question is what does Jay Powell have to do with it? He did inherit the project. What does he have to do with it? Well, they're going to find out. But the way Powell responded was interesting. Now, here was a speech that he gave. He gave this official address last night, and it was really unbelievable. No one's seen anything like it. It was an emergency sort of an announcement. And what he said was the Department of Justice served the Federal Reserve with grand jury subpoenas. Holy cow, that means you're having a trial. Threatening a criminal indictment related to my testimony before the Senate Banking Committee last June. So what that means is the testimony that he gave in front of the committee, that biannual Fed update that we cover every year, in that he stated that certain things weren't being done on the Fed renovation that were being done. They're probably not going to be able to prove any fraud or anything like that, even though most people pretty much believe it's a fraud. $2.5 billion for one office building? Come on. They have him. They have him on perjury charges because he answered a couple questions that they have on tape. They know they were false. They talked about gardens on the roof. They also talked about other luxurious items inside of that building. They've got him. So perjury charges probably coming. Now, I have deep respect for the rule of law and accountability in our democracy. No one, not the Fed, shares above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. So what does all this mean? It means they're trying to get him to step down right now. I mean, that's the idea. The new threat is not about my testimony last June or the renovation of the Fed buildings. It's not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed. Those are pretext. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public rather than following the preferences of the president. Let's read between the lines. Basically, he says the charges are because we decided to keep rates higher longer, and the administration doesn't like that, so they're going to charge us with something and try to knock us out of the box. He also goes on to say that nothing they do is political. Where is it at? I've served under the Federal Reserve under 4 administrations, Republicans and Democrats. In every case, I've carried out my duties without political fear or favor, focused solely on the mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do with the integrity and a commitment to serving the American people. Okay, so he's going to stay there until they force him out. And listen, they could easily, if these charges are brought, the Senate can have a vote of no confidence and they can just get rid of Powell that way, or he could step down. This is a fluid situation. Look for a change in the garb there relatively soon. Now, here's the problem with the political end of it. Here's the problem. Right here, you've got what? Trading economics? No, we don't want that. We want this right here. This is the key to this whole argument. Interest rates. When did you move them and why? This is the problem. The interest rates were raised until about July 26 of 2023, where they were held pat for about a year, over a year. They hung at 5, right? 5.5. All right, that's great. They were worried about inflation being persistent or entrenched. That makes sense. The half-point rate cut in September of 2024 was right before the U.S. election. U.S. election was in November. That rate cut right there was 0.5%. Went from 5.5 to 5. Flatlined in October. Boom. Cut it again in November. Okay, those are dramatic rate cuts. December, November, December. Theoretically, the December one and the November, I believe, I can't remember what day election day exactly was, but those are pretty much after the election's already been decided. Those two, or that one right there. So what's my point? My point is this. You're going to have a real hard time explaining how a half-point rate cut, after holding rates firm and raising them for the past couple of years, you get the first big half-point rate cut, about what? A month out of an election? 2 months out of an election? Then what happened in 2025? Put your thinking caps on. What happened to inflation in 2025? That rate cut is suspect. No one expected it at the time. They thought it was hyper-aggressive. It was hyper-aggressive. And what that was designed to do was potentially boost your economy, economic growth going into the election. I don't see any real way around that. So that's really what this is all about with Jay Powell. This is about his unwillingness to cut interest rates down to where the administration believes they need to be. Now, here's the thing. I don't necessarily agree with the administration on this one. I think inflation is entrenched. It is hot. You're not going to be able to restore any sort of pricing stability without higher interest rates. They don't want to do that. They want to cut these things down to 2%, and they want to get the economy firing on all cylinders and generating jobs and economic growth for political gain. Essentially, that's what you're looking at there. There's a case to be made for that. There's also a case to be made for higher for longer to try to get prices down on consumer goods. Honestly, we're dealing with COVID-19 fallout. There's no way for us to step up to the plate and say, this is 100% what we need to do. When we went unlimited quantitative easing during COVID, it completely disrupted the financial system globally. It had never been done before, really, since back in the 2008 to 2012 crisis, and even that was on a limited basis. This was unlimited quantitative easing. Pump the system full of as much money as they can, and you're still dealing with the fallout. So when we saw that half-point rate cut, before the election, it was suspect because everybody knew that inflation was still high, and that was proven to be the case in 2025, where the inflation curve on CPI looked like that. So when Powell says that he's not a political animal, that's not 100% true. It just isn't, and I think we all know that. I know that for a fact. The charts show it. So where do we go from here? Well, if Powell stays in and you have a smooth transition at the Fed, you're probably going to get interest rates are going to stay right where they're at. I mean, you can see that he's angry now. They're not going to cut interest rates this month. They may not even cut them in March. So the question is, what happens at that meeting in May? Well, they're going to have a new Fed chair by then. Then you're going to have potentially a robust move in the markets that really is dependent upon what the new Fed chair does with interest rates. If you see a dove come in, you could see somebody come in and cut by a half, 3/4 of a point right away. And the reason why, they will argue that, well, we've been too slow for too long and we have to get aggressive. I know that's a conversation that's well outside of just looking at charts and picking price points and showing key levels. But if you understand how this Federal Reserve transition is going to move forward through Q1 and Q2, it's going to give you much better insights into what's going to happen with the U.S. dollar and potentially our risk assets. If they get Powell to step down sooner, your rate cuts are going to come sooner. More than likely, that type of news is going to boost things over the intermediate term. Now, the day that Powell steps down or is swapped out for a new guy or a new lady, that day is going to be crazy. I don't know what's going to happen the 12 hours after that, but like a week later, like 2 weeks later, you're going to start to see the beginnings of what will be a new trend, and the trend's going to be in cutting interest rates. That theoretically is going to send U.S. stocks higher. It's going to send the dollar lower, and things like crypto. The crypto is probably going to rally. Cheaper money typically is good to good tech. Good to good tech, good to big tech, excuse me. All right, I got a couple questions, and then we got to jump in and do some market analysis. Any markets you guys would like to look at, I'm all ears today. We also have a couple of bond sales that we'll look at today, and then we'll close probably by looking at the Iran situation and maybe some commodity dollars. Let me see, 512 Eli, when Powell speaks, I get paid. Past inflation, now it's stagflation. Yeah, the inflation's going nowhere, Eli. Inflation's entrenched. The big question now is what do you do with your job situation? What the Trump administration is going to try to do is cut interest rates down to nothing. They're going to cut them to 2%. The idea that people are going to make more money and there's going to be more jobs, so the inflation won't be as noticeable. That's exactly what they're thinking. That's what they're thinking. So will it work? I don't know. Maybe not. Let me see. Stephen Market, if I had known about the Powell indictment, well, it's a DOJ inquiry. So basically he's been subpoenaed. And typically grand jury subpoenas come before the indictments. He mentioned the indictment in his statement. So they're going to indict him, it looks like. Let me see. If I had known the Powell indictment, I would have had a better day trading the Euro USD. Do you use Google News notifications? No, to be honest with you, I just, to start my trading week, I get in front of the screens, and about, 3 o'clock on a Sunday afternoon, I'm looking at the key news items. And I saw that one yesterday, and I said, Powell's going to speak today, huh? Wow. And so I figured there was something that was sort of an emergency, definitely. Let me see. Ralph H., excellent analysis of the Fed share situation. I appreciate that, Ralph. May not be 100% right on this. It's very difficult to know what these folks are going to do, but I think it's going to be one of the biggest springs we've ever seen with regards to monetary policy. You can't say that because of COVID. Okay, COVID's going to be the biggest one ever. This one's going to be interesting, though. It really is. That's for sure. Don't count the dollar out yet. Could be Eli. Right now I'm seeing 98 on the dollar index. We'll have that in our weekly newsletter as well, breaking that down all morning. Let me see, Steven, can you check out the Euro USD on the 4-hour, 15-minute chart? I'm interested in your opinion. Absolutely. We'll do that. And then market scan. Yes, sir. Market scan for the dollar, please. The yen is just looking bullish. Dollar yen. Yeah. Okay, let's go ahead. We'll start with that Euro USD. We'll get back out to price action here. And don't worry, we're going to cover metals and all the goodies. But it should be an interesting type of a week for really anything you want to trade. Okay, daily, nice big bounce, and you can see what happened right there. Essentially, Jay Powell's statement just shook the foundations of this pair, just like it did with most Forex pairs, and it really is a dovish market driver for the USD. There's no question about it. In any case, let's go ahead. You want the 4-hour and the 15. As far as the 4-hour chart goes, I'm definitely interested in the bid right there. So like there's your spike low, there's your spike high. What do you got right there? You're digging in at 38%, 116.70-ish, somewhere right around there. I mean, pull up the handy dandy paper trading account and go ahead and just fire away, basically, mark it, buy it. And now I'm not telling you to buy it. that would be a trade I would consider definitely bidding that thing on a 4-hour chart. And the reason why is you've got sort of a nice big run up that began in earnest yesterday. They're right there. Boom. There's Friday's close. There's the open yesterday. And you just sort of rallied. And then there's your big correction on the U.S. Open. So is this correction going to be real? Is that the beginning of a downtrend, or do you think we're going to bounce? I think we bounce. I mean, it's really difficult to build a hawkish, bullish type of thing for the dollar right now. Jay Powell is what he is, but one thing he sort of came off as a hawk. They held interest rates at 5.5% for a year. All right, that's what they did. And the dramatic rate cut, I was scratching my head at the time. I said, what are you guys doing? Prices are still at, astronomically high. That's not a bad play right there, though, on the 4-hour chart. As far as the 15-minute chart goes, if you were going to look at a 15-minute chart, this is a good look at our 920 EMA crossover that we're going to, we'll probably be trading that maybe a little bit tomorrow at CPI Live. So right there's your 15-minute chart. You really don't have a whole heck of a lot here. You have sort of a crossover right there. You'll notice that we get a tremendous amount of dojis on the crossover. Right there. There's your crossover. There would have been your signal. You'll notice the doji pretty much means we're not going to get a chance to see our gold or our purple. So when they're dojis, something like this. Very interesting though. So there was sort of your cross under, and that developed going into the U.S. session or mid-U.S. session here. Interesting stuff. Really, right on the U.S. Open, you get that crossover and a nice sell-off. To me, I still really like that 4-hour Fibonacci retracement play that we sort of outlined. You can see this is sort of an interesting zone. Maybe if we get a nice hammer to set up here, potentially maybe a bid rolling into CPI. But remember, Stephen, if you are trading this, you're definitely well advised to be aware that U.S. CPI tomorrow is going to determine everything with regards to the U.S. dollar. So be very careful there if you're diving into the Euro USD. As far as the 4-hour and the 15-minute, though, 15-minute really has nothing unless you sold back here so right after the U.S. Open. But on the 4-hour, more than likely you're holding a bid, and that really represents trying to get sort of long against the USD, with the biggest pair on the market, which is the Euro US dollar. That's the big one. It's one everybody trades. Tight spreads, all of it. Let me see. US dollar, Japanese yen. Yeah, sure. Let's go ahead and look at the dollar yen. So right here, if you're looking at a 4-hour chart, it's just sort of a pennant. We got a new day, new week. Let's do some new analysis. Let's take a big step back. I really haven't broke down the yen from a macro perspective in a long time. A couple of things that I would be looking at here. Key levels, right? Key levels are everything. That right there is your January 2025 high, which is right there at 158.88. So that theoretically is last year's high. Well, it's not theoretically. It is last year's high. So last year's high is going to be what right there at 158.88. So something like that. We're going to dial that level in and not forget where it is. Typically, you see two-way action right in front of and behind yearly highs. So right now, what we have on the monthly is a nice run-up, sort of a real compressed December. That shouldn't surprise anybody. Compressed Decembers really mean holiday trading. Our ranges are small. Everything just not really a goer because a lot of folks are out of the office. They're not taking trading seriously in December. That's okay. Right now, we're taking it seriously. There's a lot of traders in the market, and they're determining what they're going to do for the trading year. So if we look at something like this, where you get the big break, 158.21, right there, you've got that last year's highs up there at 158.88. Probably going to be looking to scalp right in front of that. But once 158.88 breaks, then we're going higher. And then we're starting to look at this old school swing high from July of 2024, which is somewhere right up and around that 162 area, 161.95. So a lot going on here. If I was looking at this, and looking for trading ideas, 162 would definitely be on my radar. 161.95, that top right there. But there's one other one that a lot of folks are probably going to ignore, and that's going to be 160 flat. It's a big round number. You'll notice that we traded it heavily right back here. This one went. We got the big sell-off back in April of 2024, and then we got compression right in there. So you want to be very, very careful around 160. I don't think we're going to see a clean break past these levels. I'm very surprised that the dollar yen is still bullish. In my opinion, I think it's going to set us up for maybe the short of all shorts a little bit later this year. You're going to have a dovish Fed. I'll be willing to bet on that. They're willing to launch probes into Federal Reserve chairman. That's never happened. Politicians, people in the DOJ, the Fed has always been hands off because essentially they run the world with printing unlimited money. That's what they do. So you want to be on the right side of the Fed, and it's clear that the administration doesn't care. They're going to promote their agenda, and that's the way it's going to be. And that might be for the right or wrong. I'm not going to sit here and stump for anybody. What we do know is that consumer prices are very high. The home market here in the United States is out of control. We know that those two things are directly correlated to Fed intervention. That's all we know. Take that for what it's worth. Right there, the interesting zone. As far as what I would be doing right now at the dollar yen, it's fairly clear cut in my eyes. It's going to be just pullback buys. The analysis oftentimes can get very boring. Shane, you do the same analysis. I go, yeah, we do it because we're confident in it. Pull back right down there to 157.50, it looks like, 157.51, and then we moved higher by 58. So that trade's already over. I would be looking to grab pullbacks wherever I could. Somewhere down around 157.50 is probably pretty good, but it looks to me like we're going to drive higher. And if that is the case, then be very careful up there at last year's high, 2025's high. Be very, very careful up there. That could definitely be an area of two-way action where you may be able to scalp to the short side. Pretty good stuff, though. I like the idea. I love the pair. The pair is a great pair. Definitely worth looking at. Okay, let's see. We got a couple other questions here on the live chat. Let me see. You're absolutely welcome, Stephen. Eli. Hope that helps. Yes, sir. Let's see. 512 Eli. It didn't work cutting by interest rates by 0.5. Why would it work cutting close to zero? Why would it work cutting close to zero? I don't follow. You mean cutting interest rates to 0%? But yeah, I don't condone that. That's what they did during COVID. That's anytime there's a big panic or there's any sort of crisis, they cut it down to zero. They cut it down to zero because that's honestly, that is the last lever that they pull. They go, okay, if all else fails, cut interest rates to zero and we'll flood the system with money. See the Bank of Japan. What the Bank of Japan decided that they were going to do back beginning in about, 2002 after the big tech crash. I was just getting out of college and the tech crash came back in 2000. I was actually, yeah, that's a long story. But I was there. I saw the tech crash. I actually spent a little time in the Bay Area at that point. And people, they called them the dot-commers. They all made millions and millions of dollars with these great jobs and all this profit sharing and things in the late 90s. And when that tech bubble crashed, they went from being millionaires to homeless overnight. Not quite that dramatic, but they went to selling everything they had and going back to work. So interesting stuff there. That's when Japan decided to shift gears into that real low interest rate environment. Successful trading is boring. It absolutely is. Okay, let's take a look at metals. Here's a good look at your gold and silver. Now, you'll notice that we've got these side-by-side on your MT5 platform. Gold is rocking and rolling up big. Silver is rocking and rolling up big. Silver is the one that everybody's watching right now. Now, gold's made new all-time highs. Silver's made new all-time highs. Silver's just printing. I mean, if you're long the silver market or you were long from last October, I mean, you're literally printing money at this point. 85 is beautiful. I don't see any way that we don't go to 100. I really don't. So we're going to let these markets settle out. I'm going to put some analysis in the hot picks video that's hit switch markets for that UK session. So we'll do some analytics on gold and silver just because they're all over the place and they're definitely trending higher. As far as what could we really say about each of them on a day trading perspective, I mean, it's relatively simple, straightforward. I mean, you're looking to bid. There's no question about it. You're looking to bid, bid, bid. So there's your 30-minute chart right in here. Sort of the pre-market, there was the big runner. You'll notice right here to open. This is pretty much when Jay Powell was speaking, somewhere right in there. Then you got sort of compression. Then the U.S. session comes online right about 9 a.m. Eastern there for gold. You can see the big move. And now we're just sort of chopping sideways. So if you wanted to bid this thing, I probably wouldn't be using a 30-minute chart. I would step back to my daily and I'd say, okay, what can I get done on the daily? Spike low, spike high, something like that. Pullback zone right around 45.50-ish, 45.46. Pretty solid. It's very difficult to argue with going long metals. You just want to wait for a pullback and be smart about what you're doing. You don't necessarily want to buy 46s now because you could go for a big ride, and typically that's how retail traders get burned. They just time the market wrong. I mean, we all can pretty much see the long side is the right side. The question is how do we get into this thing? Well, we wait for a pullback. You can almost never go wrong waiting. It's just the hardest thing in the world to do. The old Tom Petty song, "Waiting's the hardest part." If you guys know who Tom Petty is. This right here. I mean, when we sit around and we talk about chart patterns, we talk about technical analysis, we talk about all these different things. That's a cup with a handle. There's your handle. We talked about this, and then there's your break. I mean, that is a cup with a handle. Now, is my drawing very good? No, not really. I mean, we could do all sorts of things, flatten it out, try to make the cup look a little better. Our long-term level, though, our long-term Fibonacci was right down here. We couldn't challenge that 38% right down at 69.50. Compression. There's your rally. Compression, break. So think about a cup with a handle. What happens with a cup with a handle? You have an initial high, boom. You have a pullback and sort of a trough, number 2. Second high, number 3. Area of compression after the second high, and then this thing just breaks high. So we look at a cup with a handle. The bullish confirmation was a beautiful thing for me. That looks like a weekly or a monthly Fibonacci that we have. I think it's a weekly. We stayed above 38%, and we just broke high. So right now, I mean, it's sort of all done. The cup with handle, fantastic. One of the best I've seen in a while right there. Boom, boom. What would you do now? Bid it. You want to bid, just like the gold chart. 3-day range, sort of a spike low, almost a little hammer there, really. Then there's your break. Pull back right on 81.50. hard to argue with pullbacks right now. Now, remember, CPI is the big deal. That's the one that's going to be dealing out the volatility tomorrow, so be very careful. Let me see. Let's see. Sounds scary. Eli, I've heard stories of people jumping off buildings after stocks crashed in the 30s. Yeah, it was 1929, and they were jumping out. I won't share the names involved in the story. One of the folks that I traded with when I first came into the market ran a very successful trading firm, futures trading, back in the old pit days. And it was a sort of a family affair, him and his brother. And the losses when the markets transitioned from the pit to the screen, a lot of the pit traders lost everything. And some of the losses got way too much to where he knew people in the industry that were very close to him that actually did take their own lives just because it was too much to bear. They couldn't move forward without, not necessarily the money, but after losing the money. There's something about losing the money that I guess we could address right now. When you lose large sums of money, and I sort of knock on wood, I've never lost a huge sum of money, and a lot of that's because I don't risk it. So that's one of the things. And I'm talking about life-changing money. I'm talking about going into the market with $500,000 to your name and going into the market with $300,000 and maybe flushing 300 and then losing the rest of it too. The pressure of that is immense. There's feelings of, remorse, regret. There's feelings of shame. How could you do it? How could you let it happen? Also, these folks, they have families. They have wives and children or husbands and children, whatever. And that kind of pressure, when you're playing at that level, does incredible things to your psyche. The cortisol, the stress, the emotion takes over, and it starts dictating everything about your experience on this planet. If you've ever taken a big loss, it's tough. A financial loss can be as devastating as a personal loss. In some cases, more devastating. I've talked with a lot of traders over the years, and I've heard several of them just really talk about the shame of blowing out their account. I feel ashamed. I'm embarrassed. They feel embarrassed. How did you lose that? How did you do that? Well, we're traders, and we take risks. That's why you put the money in your account that you can lose. And if, in fact, it doesn't go your way and you lose it, okay, learn from your losses. Get as much out of that money as you can. Come back ready to go in the future. But you never, ever put all of your money, in the market on one trade or on a series of trades, because it can really take it all from you. That's one thing I've never done. I've avoided that. I have never gone all in on the markets. I've always left myself an out. I always leave myself a buffer in my personal life, and honestly, my trading accounts and my risk capital money, there's always a buffer there. There's always a buffer, because there's no way that I'm going to sit around and let these screens and this money and this lifestyle put me on a window ledge. It ain't going to happen. Now, there's a lot of reasons why people end up on window ledges. There really is. But there's no way that I'm going to let this screen and the loss or gain of money, there's no way they're putting me on a window ledge. No way. And that should be all of your views. It is just money. Man made the money. Money never made the man. Woman made the money. Money never made the woman. It's just money. It's your profession. Take it seriously, but it's just money. And that's not what you guys want to hear, because, money's everything. Money's not everything. Believe me. And you just keep your feet on the ground. We don't go to rooftops after a bad trade. We sit down, we learn from it, we come back tougher tomorrow. That's got to be the name of the game. But yeah, to answer your question, they did jump out of windows in 1929. They jumped out of windows in 1985 as well. The dot-commers that lost millions right around the turn of the century, around 2000, 2001. Those folks, a lot of them took it really bad. And I've heard of people in the industry that have done it. The stories are heartbreaking and they're really terrible. Don't swim in that end of the pool. Don't bet the ranch. I hear you, yes, sir. Chances make champions. They do, Eli, but they're calculated risks. We take calculated risks. If you believe that risking a huge amount to get a huge payoff is worth it, do it. But just be prepared to live with the consequences. Just remember that. As long as you can live with it, you're not over-leveraged. Don't bet the ranch. Broke is just temporary. I agree 100%. Broke is just temporary. All right, we've got a few. Let's see. We had a question here. Great Britain pound, Australian dollar. too flat. That was the name of the game. I think we covered this one not too long ago. But right there, so there was sort of your spike low from December. And then right there, you could see sort of that triple bottom setting up back to October. And then again in November, and then again in December. This is a daily chart. And you'll notice we sort of broke through a key level there. And now, what are you fighting with? About 2,000. So let's go ahead. We'll do some fresh analysis here. But the big thing that I would be looking at this week is that 2 level. Don't lose track of that. So what do we have here? Well, I mean, we've got a real dirty chart. That's what I would call just really choppy action for about the past 8 weeks. Lows and then highs and then lows and then highs. And it's just really difficult to trade. What you want to be aware of is your key levels, 2,000 or 2 even, is absolutely imperative. Keep a close eye on that. That's big. That's the bottom of this market. Essentially, we haven't been able to sustain action beneath that. I think once we break, or if we do break, then we'll be looking to sell because there really isn't a whole lot down there except for other key levels, which is just beautiful for us. That's our kind of trading. We'll have an opportunity potentially there to get short. Now, do you want to get short right now? Well, I mean, you've got levels. You've got different things that you can do. Spike high there to last week's low. Is it a pretty good short? Well, it's kind of already gone. 2009, whatever, 2093. You're down right around 2005, 53 there. I would say that it's very, very tight in there. I don't know that I would be too wrapped up in getting involved just yet. The key would be between 2,000 or 2 even. I keep calling it 2,000. Between 2 even and that 209 area. This zone is going to be key. Personally, I would see the real money or the real profitable trades developing when you break to the south. As soon as you break beneath that triple bottom and get established, then we can sell pullbacks from here and potentially target a real move. That, to me, would be probably my game plan going into Q1 here, at least with this pair. So definitely one to look at there. And always, and I mean always, keep an eye on that gold market, especially if you're trading the Aussie. Okay, we got a couple more. Is Euro CAD. Let's go ahead and look at the Euro CAD. I got some questions during the break. Private messages. If you want me to look at a market, be sure to send me one over at howtotrade.com and I'll look at it. Euro CAD's interesting, isn't it? It's just been really flat for the longest time. And there's a lot of these that have been really flat for the longest time. It's Forex trading, so we don't necessarily get paid on big moves every day. This right here, I wouldn't even really venture a Fibonacci retracement. I mean, we could, but you'll notice how much I'm blowing the chart up. That's a trick that there really isn't. We're trying to make something there that really isn't there. I like much bigger ranges to trade. Something like this, 160, 61 up to 162. It's not the biggest range in the world, but I guess we could scalp it potentially. Right there, the 13-period EMA is at 161.75-ish. Pretty good stuff. 161.64. So, if you were looking at maybe downside support, it's pretty good right in that zone. 161.65 to 161.75. Pretty darn good downside support there. I think you might have an opportunity. Now, we sort of already bounced off of that zone, but maybe if we test it again, that could be a real formidable area as we roll deeper into the trading week. So if you're holding longs, you're probably in the right camp. Just be ready. Just brace yourselves. Euro CAD, keep one eye on the oil market. The oil, natural gas, that does drive the Canadian dollar directionally. So be careful there. All right, let's see. We got the Swiss yen, and then we'll go ahead and sign off. We got a few other news items to cover. If you have any other markets, I'm more than happy to look. This is pretty much the game. You can see we haven't looked at this pair in a long time. The Swiss yen is an interesting pair. And the reason why I say that is because it's one of those pairs that can be deemed a true, a safe haven, maybe like a safe haven swap, if you will. You've got the Swiss franc, which is a safe haven. The Japanese yen is viewed as sort of being a safe haven, not because it's strong against the other currencies, but because it is unique. Japan's economy is unique, and it gives us the ability to diversify away from the U.S. dollar in a lot of different ways. Now, the Swissy does that as well. The Swiss franc essentially is the Swiss franc. It's where you put money when you don't want it touched, and that's great. Japanese yen's a little bit different. The Japanese economy, more volatile. The Nikkei, more volatile. BOJ policy, very interesting right now. That gives us a diversification tool just because it's different than the other markets. It's different than the U.S. dollar. It's different than the Great Britain pound. So some of these, you say, Shane, how can you say the yen's a safe haven as weak as it's been? Well, it can be looked at as a safe haven because it's different. And a lot of folks were short the yen for a lot of years, and that played into their diversification strategies in their portfolios. In that way, you could say it's a safe haven. It's unique. That's what brings its appeal. Diversification reasons. That's why a lot of folks consider it a safe haven. Do I think it's a safe haven? I don't know. You could probably mix it in there with a bunch of different holdings and be okay. Playing the yen, though, anybody that's done it, they know how risky it is. Key levels 200, that's coming right up. So when we're looking at realistically this pair, I mean, what are we doing? We're going in the way back machine trying to find valuations and your key levels at 200. So the Japanese yen continues to lose market share against the majors. Interesting, since we even heard that you're going to see higher interest rates in Japan. Trends up, no question about it. You definitely want to be looking to bid this thing if you get an opportunity to do so. So something like this, very flat, nice, sort of an interesting range here. Potentially the market read would be, spike low, spike high. Beautiful move, right? I mean, that's a beautiful bounce right off of that 38% level. These 38% levels are pretty tough to argue with, right? There, dial that thing in perfectly. I mean, that's a sharp trade, and 196.25. That's tough. So if you do get another shot down there, maybe. It looks to me like, though, you're going with a bullish type of a bias here. One thing that I would take away from this weekly chart, what do you got? Sort of got a bullish pennant. There. So 200 definitely is going to be on the radar for us later this week. Do we want to buy or sell right now? I'm partial to the long side of this market. So if you're looking at potentially a bid, you can look at a daily, maybe a pullback bid. 197.75s maybe, 197.66. Interesting stuff. Let's try one more thing on our 920 EMA crossover. I do want to check that out on the 920 and see what it says. All right, 15-minute chart. Too short a time frame. I'm not overly interested in that for today's intraday action. Let's look at a 4-hour. Okay, just as I suspected, you got sort of that. You had a bid signal that came across the board on Friday. Nobody knew where we were going to open those. So that's one of those you're like, can I take that? Nah, that would have been a real tough one to take. Let's go to a daily, though. Daily's interesting. We haven't had a daily crossover right there since back in August. So this has been the trend of all trends, if you got it. Do we want to make another leg up on this one? Could be a little bit tough. I would just stay with a scalping approach if you're going to take the longs, but definitely the bullish action is there, and we've come a long, long way not to test 200. I'd probably be looking at 200. All right, let's see. All right, one more market, and then we'll hit a few fundies and call it a day. Great Britain pound, Japanese yen moved up. Can we check the next move? All right, daily, clearly just an absolute beautiful bid there after a failed sell. Great reversal. There's your weekly. Man, what a trade. 920 is fun to back test. You just go through and look and say, wow, you get a lot of really good moves on that. Let's look at some Fibonacci's. Okay, we're moving. We're moving higher. Your key level here is going to be 215, essentially. What'd you have right here? 210 was sort of an area of really great compression there on the weekly. You had three tight weeks and then a big break, and now we're logging. We're rolling to the top side. I'd probably be looking to get to the top side of this one as well. I mean, bullish bias is definitely warranted, and you'll notice that these yen pairs, the technicals are all sort of the same. You had really that spike, that hammer low that developed back on the 8th of January, which would have been last Thursday. And you're sort of rolling higher since then, really a big-time two-session gain of almost 1%, and then you've got 212 even. That would be a really tough trade to pass on. Right around 212. Now, you're trading 212.85 right now, 212.82, so you're going to have to get a pretty good pullback there to even get involved. But that's not a bad trade. It's not a bad one just to wait on if it comes your way this week. More than likely, you're going to push a little bit higher before we get the reversal. Something like that, though, could be very good, say, on a 4-hour. Let's take a look at a 4-hour. Essentially, that's what you're looking at here on a 4-hour, and it's going to be a little bit different with your entries because you go to that spike low there and something like this. But this is a situation that I really like. It's just where can we get this top to set up? You'll notice our daily support's down there right around 212, somewhere in that zone. You've got 38% on the 4-hour right there at 212.08. I mean, that gives us really a high degree of confidence in this zone right in there that's going to be really valid downside support. So I'd be watching that closely. If you get an opportunity to bid down there, maybe. If you want to sell this market, I mean, do so at your own risk. Just be sure to lock in a stop loss. You don't want to just sell it and let this thing creep higher and higher and higher. It feels like a creeper. We've got 215 up there as a key level. Remember, a lot of times key levels act as magnets. We treat them as support and resistance, but a lot of times they're magnets. So be very careful here. All right, let me see. Since you have paper trading analysis, I wonder if you can show swing trading for live sessions. Interesting idea, Eli. Might take a look at some swing trades. I don't know. I mean, essentially that Euro USD trade, I don't know where price even went since we covered it. Well, we'd have to pull it up again, but that could potentially, we could play some swing trades. Maybe that's a good thing to do on Mondays. Grab a few swing trades. Not a bad idea. Let me see. Tina Xing, hey Shane, did you say gold pullback at about 45.50? Well, I mean, big picture, you can't really, in my view, you can't really go wrong looking at something like this as your daily chart. Now, whether or not we can get this 30 level to hold, Tina, is really difficult. I don't know. 45 though, probably rounding up to 50. I would be a bit more conservative with that entry. I don't think I'd be buying 45.50s, at least not right now. I would love to get a crack at, maybe 45, 47s. You probably could get away with 45.50s. You would just have to be ready to take a draw. So that would be maybe a challenge. But, 4-hour chart right here on gold. I love the 4-hour chart on gold. It's solid. Gold's a 24-hour commodity. So right there, something like that. I mean, there, you're at 45.64. I think that's a bit aggressive. For this early in the week. I would definitely want to hold off a little bit, especially with CPI coming our way. But 45.50-ish, probably going to be a pretty good zone to attack, 45.50 to 45.45. If you're patient, you probably get the back end of that 45.45. 47.50 sort of splits the difference of that $5 range. I like that one. Bid was 210. All right, I definitely need me a pullback on gold. Well, we'll see. We'll see what happens. All right, a couple fundamentals, guys, then we'll sign off. We've been going. Let me see. Week 1, it's not week 1, it's week 2, so you're going to have to excuse me. I missed that one on the header, but the rest of it's okay. Iran and Powell were the news of the day today. We're going to close with Iran. Tuesday, U.S. CPI. I'm going to be back for CPI live tomorrow morning, early my time. We're going to have all the coverage live. We're going to play some trades. We're going to break down the analytics and see exactly what the markets move and get you ready for that U.S. Open tomorrow. So definitely take a look at that one. U.S. CPI live, bright and early tomorrow for me, probably in the afternoon for where most of you guys are located, which is fantastic. I wish it was in the afternoon for me. Unfortunately, I'll just drink a little more coffee, right? Wednesday, U.S. PPI and retail sales. That's a big one. That's potentially another big event. PPI, big time event. Retail sales, not a bad event either. That's going to be a nice news day for us Wednesday. Thursday, we've got the Philly Fed and initial jobless claims. We're going to be doing our Switch live trading workshop on Thursday, 1 p.m. Eastern, about this time. And we're going to be talking about your orb strategy, how to trade the orb. We'll set it up. We'll probably execute a few trades. I'll probably execute a few trades that morning, and we'll monitor them and see exactly how it goes. So we already have sort of a template to work with during the session. If you have any questions about the opening range breakout strategy, bring them on Thursday. Bring them. We'll get into it, and we'll see if we can get the job done. Friday's No Donation Friday. Interesting stuff there. We're going to talk money management and really recap the week that was and what exactly we need to do to prepare to be successful as we drive, and I mean drive through Q1. All right, everybody. We got a couple of things here to cover that I didn't do a real great job on. I wanted to cover this one earlier, but that's okay. The protests in Iran are very serious. They've been going for about 3 weeks, but the last few days have been more aggressive on both sides. Now, we've got reports, Human Rights Watch, I believe, said 500 dead, 10,000 have been incarcerated there in Iran. The government typically treats these things with an iron fist and authoritarian type of an approach. The difference this time is Trump threatens a strong military action against Iran as protest deaths rise. You're probably looking at more airstrikes there at least. The question is the regime in Iran going to be removed from power? Are you going to see a regime change? This is historic stuff out of Iran. These are probably the largest widespread protests that I can ever remember seeing in Iran. Iran is one of those places where protesters are typically met, like I said, with an iron fist. And so this stuff doesn't get off the ground as big as it is right now. A lot of people would call it a revolution. Maybe it is that. It looks to be that. So we're watching this closely. Trump has already pledged that any violence against the protesters was going to be met with a U.S. response, probably going to be airstrikes. You've got the Venezuela situation. You've got Iran. You've got civil unrest here in the United States. If you're watching this in the States and you've seen the news, I mean, you know exactly what's going on pretty much in every metropolitan area right now. That's also a market driver of a little bit of angst. So a lot going on in the geopolitical landscape. As far as the Iran situation, I'm watching that one about every 10 minutes, every 20 minutes, every 30 minutes, because it feels like something's going to break there. Big picture, energies are on the front burner. We'll put the video out later. You'll catch that for tomorrow's UK session, and that's going to be over at Switch on YouTube, Switch Markets on YouTube. We're going to do that. I'm going to cover it a little more in depth there. Our newsletter, our Switch Markets newsletter has all that as well. I just did a write-up on it. So there's a lot going on there, but the big thing to take away from this, the Venezuela situation and the Iran situation, is oil. And Iran is potentially a big deal, getting those oil exports back onto a global marketplace, but also security in the Strait of Hormuz. We'll talk more about this as the week goes on. Strait of Hormuz is the primary shipping lane out of the Middle East for oil exports. And anything that threatens that strait, we talked about this last year a lot, anything that threatens that strait to be closed for business could create a potential shortage on the global oil markets within just a few weeks. So there's a lot going on here for energies. There's no reason, no question that that's going to be some of the biggest, best trading that we're going to see is going to be in commodities. Gold and silver are unbelievable right now. Natural gas is up 7.5%. I didn't even talk about gas. Natural gas is up big. Crude oil sort of flat, but a big daily range. And you've also got gold. I mean, it's just it's all coming together for 2026 to be the year of the commodity. We'll see how it goes. All right, everybody, I'm going to go ahead and sign off for now. We have plenty to chew on here. Watching J. Powell closely, watching Iran, watching Venezuela, watching the civil unrest here in the United States, Minneapolis, Portland, Philadelphia all of a sudden. So there's a lot going on here. We just have to stay tuned to the news, but we fall back on our technicals and really our discipline on how to engage these markets, reach in and take what we want, and then go about our business. That's it. A lot of confidence from everybody. Confident mindset. Game plan for today. We're ready to rock and roll. We're ready to get going. We know what's coming our way. Volatility is coming our way. We know what we have to do. Let's do it. All right. Good session, everybody. Thank you for joining me. Tomorrow, CPI Live will be back not too long from now. So bring any and all questions tomorrow, and I'm going to go ahead and have some trade ideas lined up, and I think we're going to get after it. All right, everybody. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.